Hello traders, Gary Wagner here. It is September 25th, 2012, Tuesday, approximately 11:30 in Honolulu, making it 5:30 in New York. And this is the daily report for gold and silver. We are seeing a lower pricing pretty much across the board, except for platinum. Platinum is trading higher today, with a gold, as you can see, currently trading 1760.27. That is the bid. The ask is 1761. Puts it down about $4 on the day, 390 or 0.22% lower. Has a low of 57.90 and a high of 76.70. As I said, silver also trading lower. That is down almost three quarters of a percent, low 33.59, high 34.60, and as you can see, current print is 33.66, running around in that area. You know, traders, we have seen considerable pressure as this market's been moving up. That's not so much pushing the market down, but actually defining and showing us some real resistance. What we have done about it as a protective measure, of course, is we have began, what was this, about a week and a half ago, slowly raising our stops. Current stop right now is at 1750, just below that in the gold market. And my sense is, although I can't tell you if in fact this market will correct, it's a logical point for it to correct. In other words, doesn't mean that it's going to, but my sense is that there is a higher probability here than maybe at some points in the past. We talked about yesterday why I feel that way, and we'll kind of go back through it. But most importantly, as you can see, we do have some resistance just below 1800. There's no doubt about it. We also have historical references on two occasions during this last correction that kind of alluded to the fact that these could be potential resistance points, because there is technical data which supports that in terms of a historical reference. That really, traders, is the best information that I can go with. The best laid out plan that I can give you then, because we have such sizable profits in the market, is to tighten the stop. Now, my sense is even if we didn't have any stop in the market whatsoever, and the market came down and even came down and tested certain areas, whether it would be 1726, which is my belief of where the market will probably go once it does find a correction. It's a logical Fibonacci retracement point, and then move back up. Heck, we're in at 1636. We could weather that kind of a move. However, we don't know if the market's going to come down one. If it does, we don't know where it's going to go. And long term, meaning if you're holding on to physical metals right now, I wouldn't be so concerned, because as I said, I'm not looking for such a deep retracement. But for those trading the markets, we want to try to maximize the profits, weather out that corrective wave, and then of course re-enter back to the long side. As I said, we're looking at some weakness, but this, of course, is just our weekly chart. Now, traders, when we look at our daily chart, it becomes a little bit more evident to me that the potential for our correction right here is pretty solid. The technical evidence is growing. I point to our MACD. It hasn't crossed, but they're touching. Take a look right there. You can see that the MACD right now is just about to cross. You can see that right in here first. Second thing is, we're looking at Henkin candles. I'm going to want to convert this to a candlestick chart before we move on to silver. But on a straight Henkin candle, you can see we've got first tail here, no tail, no tail. You notice we get these much smaller body sizes right there. We get a return of these wicks, and then we go to red. That, folks, to me is a type of chart that, or it's a type of chart characters, or candles, I should say, that I would expect to find as a market got top heavy and then began to reverse. Now, let's convert it to a candlestick. Now, on a candlestick, in this case, it doesn't look a lot different, but here's what we're seeing, of course. The body size has gotten very, very small. These are almost doji-like candles, if not dojis. You do have almost a shooting star here, not a very, very long wick. You'd want to see that wick at least twice to 3 times the length of the body. We're not seeing that, but it is shooting star-esque, I should say. And we do have, of course, this market consolidating. Of course, the question has to be, we have seen this market trade higher and then basically consolidate. Higher, basically consolidate. So we've seen it kind of stair step up the entire distance of this most recent move, and this could in fact be just a consolidation area. However, we are seeing some other signs, whether it be the MACD or the formation that we're seeing in the Henkin charts, that is leading me to believe that we might in fact have some sort of a corrective wave very, very short at hand. And traders, for the last chart of gold for today's show, 420 minutes, so I'm going to an even shorter term just so we can illustrate it. As I think I've said, my line in the sand is right around here. Our stops are at 1750. You can see that these lows match here. As long as this market trades above this point, I'm comfortable with our long. If the market breaks through these points, well, our stop is probably going to get hit. Rightfully so. We will take the money, we will take the profits and look to reposition ourselves. Silver. All I can really say with silver is we've talked about this over the last couple of days. I definitely think we have some real resistance at 35. The market has been really pushing lower. It's now below 34. Our stops, I believe, are sitting at around 33.20. This is 33.14. Therefore, if the market does continue to track lower, we will take our profits. Physical traders, again, I'm not so concerned because I'm looking at shorter term swings. Simply look to hang on in these areas. When we go ahead and, assuming we get out and pull profits, when we re-enter a long position, we've determined that the corrective period is over, you can go ahead and re-enter and begin to reaccumulate physical assets also. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.